Yo, what's going on, guys? We're back. In this video, I'm going to be talking about my favorite PD array, which is the CISD, which stands for a change in the state of delivery. So, first of all, I want to talk about how they look, and we're going to be finding some examples on the charts. So, first of all, a change in the state of delivery is basically an order block, but a change in the state of delivery potentially happens when the markets go from a sell program to a buy program, or vice versa, from a buy program to sell program. Right, so this is when the algorithm shifts gears from bullish to bearish, from bearish to bullish. um so the name itself should explain a lot, as well as we're in a market maker. We're inside the sell side curve of a market maker's buy model. The smart money reversal right here will be our change. This is where we will try to find our change in the state of delivery, and this is where the change in the state of delivery should also occur. All right. um so a change in the state of delivery needs to take out sell side or buy side liquidity. All right, so needs to um tap into a higher time frame key level slash PD array, which in the lower time frame that is going to be our sell side or buy side. Right, so let's say this sell side, this buy side liquidity right here is a let's say it's a 15-minute fair value gap, a 15-minute bearish fair value gap right here. So the high of the fair value gap is going to be our 1 minute time frame buy side liquidity. All right, so this is how a CISD looks like. So it's about the green candles that takes out liquidity. All right, so we can see here these two green candles right here took out the buy side liquidity. As soon as these two green candles take out the buy side liquidity, we want to see a aggressive candle to the downside that violates the candles that took out liquidity. All right, maybe you should go back to that second and rewind the video a little bit. But the candles that takes out liquidity, we want next, what we want next to happen is a quick move to the downside that violates the three consecutive candles that took out liquidity. All right, which in this scenario right here, let's say it's these two green candles. Right, so what I want to see, what validates a good CISD for me, is not this one, it's both. It's both, or let's say there's three. Those three candles, those three consecutive candles that took out liquidity, I want an aggressive down close candle that violates all of them with a singular black candle or bearish candle. Either it's singular, like either with one candle, or two. I don't want it to be ranging like this. No, this for me is not valid. All right, so this right here for me is not valid. This right here is not a valid change in the state of delivery. This is a ranging market in the lower time frames. This is what's happening in the lower time frames. No, this is not displacement. I want to see displacement. So there is a difference between this right here and this right here. Right? The difference is this got displacement. This is where the algorithm shifts gears and is in a hurry. All right? But this right here, this for me is a retracement into the dealing range, whether price wants to go higher or whatever it wants to. So this is not a valid CISD at all for me. I've been trading, I've been executing more than 150 trades on this model right here, or this PDRE right here. So I know I'm very good. But the thing about this one is you're going to make a lot of mistakes when you're not familiar with it, because you're going to see a CISD everywhere. So you just have to be very patient and very careful with it, especially when trading on it on the 1 minute time frame. When I started using the CISD on the 1 minute time frame, I made a lot of mistakes. I was always in a hurry. I was always making these small mistakes, but you'll get there because it takes time until you can like see it. But once you see it, you can't unsee it. So that's what it's all about. It's all about like practicing and collecting data about it, and experiencing several and different kinds of scenario every day. All right, so we got the CISD with the inversion, got the CISD with the breaker, we got the CISD with the breakaway gap, we got the CISD with the fair value gap. Got a lot of scenarios which you have to take notes and go into the charts and take notes. All right, so this one right here is a CISD with a breakaway gap. Why? Because if you take a look at my two previous video, my first video in this channel, you can see where I talk about the power of three or the dealing range in the lower time frame. All right, so let's say this right here is just like this and like this, like this, like this, and we come here and we have a fair value gap just right here. All right, so this is the breakaway gap. Why? Because we have a dealing range in the lower time frame. This is a classic power of three candle right here, open high close candle, open high low close candle. So when we wick up and reprice this body's 50% and into the CISD's let's say levels. All right, so this is going to be our breakaway gap immediately. All right, this one right here, you'll probably understand a bit better if you go watch my first video about the how to read the lower time frame candles. So yeah, basically that's it. A change in the state of delivery. So let me try to find some examples. So this right here is the, let's go to the lower time frame. We have this, let's say when was this right here? 10 a.m. Beautiful. So we have this buy side taken out. All right, we're still in this bearish CB right here. We're going into the 15-minute time frame. All right. So right here, my friend, these two bullish candles took our liquidity right here, right? Failed to close above. I mean, we closed above right here, but if we just go up a little bit to the 1 hour, let's say the 1 hour time frame, which it's much more beautiful right here, right? So we can see this buy side was taken out here, and this is a turtle soup. This is a liquidity sweep. All right, price failed to close above right here. All right, price failed to close above right here. So what do we have right here? We have a bunch of green candles that took out liquidity. For me, right here, all right, for me, my interest goes immediately to these two candles right here, because this candle right here especially, this was the one that took out liquidity. As soon as we take out these 1, 2, or 3, right, for me at least these two, as soon as we take out and close it below these two candles right here, this right here is a change in the state of delivery for me. Why? Because first of all, most importantly, price to cal liquidity. We're in a premium, and what did price do right here? We were in a buy program. Every single bullish PD array were respected, all right, until we took out the buy side liquidity. So right here, when these two candles takes out liquidity and the next candle is bearish, but how you can see with one singular bearish candle, it takes out 3 candles right here. You see that with displacement. This is very beautiful. As soon as I see this, these two green candles that took out liquidity, this is a change in the state of delivery. This tells me now the markets, all right, the market goes from a buy program to a sell program. This is when this is just like a button. You can look at it like a button. The CISD is like a button. This for you is when price tells you, all right, I'm shifting from buy side delivery to sell side delivery. I'm shifting from bullish PD arrays being respected now to bearish PD arrays now being respected. All right, so this is the activation button to the sell side delivery of the market maker sell model, or just when the markets go from a bullish buy program to a sell program. All right, so these two candles, especially this one took out liquidity. Second one goes up one more time, and we got one bearish candle with displacement and good momentum, takes out the candles that took out liquidity, retraces back into the dealing range, right? Comes back into premium, into the CISD. You can see how the CISD right here is respected very beautifully, right? The opening price of this candle right here never closed above. You see, never closed above. Right here. So now we go lower, right? We have, this is now an order block for me. The second change, or the second order, the first order block that forms for me in a in a smart money reversal. So what I mean by that is right here. The first order block that forms is a change in the state of delivery. The second one that forms, which is these two, as you can see, these two, what did these two candles do? These two bullish candles, it came back to a fair value gap, into a key level, right? And into premium, right? Into premium. And then these two green candles that rebalance the imbalance got wrecked by one single bearish candle with displacement. So right here we got 1, 2, and 3 and 4 candles get violated by one singular candle. So that for me is a displacement, and that confirms to me that we are again bearish, right? So we got the mitigation block, the order block, alt-high, rejection block, fair value gap. The PDRA matrix, go back to the previous video in this channel, you'll know what I mean. So the next one that forms is now an order block or propulsion block, whatever you want to call it. All right, so now this one is a order block. The first one is a CISD because we went from a uptrend or buy program or a bullish price now turning to bearish. So the first one is a change in the state of delivery. The second one is a order block. You can see now this also right here. What do we have? Look closely, my friend. Again, we have the same scenario right here. You have two candles retracing back into the mitigation block, into the dealing range, and into the fair value gap right here, into a key level, which is this one right here. So these two green candles for me, you see, these two green candles, you see how this is a retracement, this is a hourly time frame, this is a sell model on the lower time frame, all right? So you can see now with this singular candle, these two candles got wrecked and got violated below the opening price, all right? So the wicks, they do the damage and the body tells the story, all right? So that's what ICT says. So now we have another order block or propulsion block, whatever you want to call it, right? So as soon as it gets violated right here, it confirms the next candle. These two green candles should support price and should act as real resistance right here. So it opens highs into the order blocks. These two candles, you can see how the mean threshold holds and is retraced into very beautifully right here. You can see that, right? And closes below. Now, the market for me right here is very bearish, and what I can consider is a either a market order sell, or I can sell at this area right here, targeting these equal lows right here. Beautiful, beautiful equal lows, right? You see, because when I see price come back into these two order block and drop so heavy, closes below this low, I'm not going to be waiting for a fair value gap or a such a big retracement right here, because looking at the previous price action here, we got a fully imbalanced get fully rebalanced, right? So this now is balanced for me. The next one doesn't need to retrace back into this zone right here. You see, we never comes back, we never come back to this area. Why? Because we had sell side delivery, buy side delivery, sell side delivery. So this right here is a BPR, right? A BPR for me is not, maybe maybe you don't use it this way, but how I understand a BPR is price is balanced, sell side and buy side delivery is balanced. So we're not going to be talking about that topic so deeply, but let's just keep it on the CISD, right? Yep, and now we are heavily bearish. So you see, okay, so now this is very beautiful. This example right here, this is perfect. Why? You see this bearish candle right here. This would have been a CISD if why? Because this bearish candle took out this sell side liquidity right here, all right? But look at this. We never closed above the opening price, so that's what makes it invalid, even though we had a small inversion for value gap right here. All right, so you are not going to take this trade because we never closed above. That's the first point. We never closed above the open. We need to close above right here. Second of all is, look, we had one, let's say these two candles right here that, no, let's say just this candle. This one took out liquidity with one single candle. What I want to see here is for, in order to trade the CISD, in order to make the CISD valid for me, is at least I want to see this candle get violated like this. All right, that's what I want to see. I don't want to see 3, 4, 5 candles. No, that's what I don't want to see. All right, you see, we get 1, 2, 3, and we did not even close above. So that is that's an invalid CISD right there. But this could have been a good CISD. Why? Because as I stated before, we took out liquidity, right? We took out liquidity, and if we could have seen a displacement to the upside and violated this candle with 1 or 2, not a range, because this right here is just a retracement to back into the dealing range. All right, back to premium, because we took out a major liquidity, maybe weekly or daily, I don't know. Yeah, we took out this daily low right here. All right, so let me try to, all right, so this one right here, we took out liquidity, previous daily low, right? We took out previous daily low, which is sell side liquidity. And what we see here is we see these two candles took out liquidity, right? These two. Let me just get it in a box. Default. Promise this is a real game changer. These two candles took out the sell side liquidity. We had an inversion right here, right? We had a bearish fair value gap getting violated. We had these two candles. So in order for me to participate in this change in the state of delivery, we see, let me just explain this real quick. You see why this is a change in state of delivery is because What was the recent trend? It was a downtrend. It was where bearish PD arrays got respected and until we took our liquidity, right? So right here, price was in a sell program right here, all right? We took out the major liquidity, major sell side, which was Thursday's low, and we can see Wednesday was bearish. Wednesday was bearish. Tuesday was kind of range day. Monday was bullish. So we've been down most of the week. Bearish, bullish, bullish, bearish, and bullish, bearish. I think this is right. Yeah, bullish, bearish. So down, up, back into the dealing range. So we've been in a downtrend right here. So the most recent one is right here, which is when price is in a sell program, as I said. Bearish PD arrays are respected, going down, going down, going down, taking out liquidity. The two candles, where was, or how many candles took out liquidity? It was these two right here. Does it get violated? Yes, it does. But for me, this right here is a low probable change in the state of delivery. Why? Because this is what I don't want to see. One, two, three, four. You see this? No. I want to see good momentum. This is what I want to see. Let's say, yup, this took out liquidity right here. This one is beautiful. This one is beautiful. This one took out liquidity right here. All right. I want you to see the difference. I want you to see the difference between the price and the time. All right. Both how much time is it spends right here. You see these two candles, this one and this one, took out the major previous weekly low liquidity. Immediately we go up, retracement, we go up, and we go up with a single candle. We violate these candles right here. So this is beautiful. This is a very good displacement right here. Now this is a change in a state of delivery, right? And this is our what? This is our breaker right here. This is the breaker block. Low, high, lower, low, higher, high. Very easy. A low, a high, a lower low, and a higher high. This is an intermediate term high. This violated intermediate term high, CISD, and the breaker. So that's a beautiful one. You can see how price did not spend time here. It just went up, boom, right? A small retracement and then up, back into the dealing range, a retracement, right? But right here, you can see it spends a lot of time. Price is just accumulating, 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 and then boom, boom, boom. So for me, to be honest, out of like, I like this one better than this one because of the displacement and the raging market right here. So this for me is, this works, but this one right here is beautiful. Comparing it to this one right here, and let's just find another one. So it's everywhere. Let's go to the 15 minutes. All right, so right here, 1, 2, 3, 4, 5. This is our change in the state of delivery. Why? Price took out this buy side, but that's not the main thing right here because this is a tap into a higher time frame key level right here and back into the dealing range. This fair value gap got respected beautifully. If we just go to the 2 hour, 3 hour, 4 hour, very beautiful. You see we have this big liquidity void right here. We go to the, so this should be this right here is our buy side, all right? So those candles that took out the buy side liquidity and tapped into the higher time frame key level slash PD array was this candle, this candle, this candle, this candle, this candle. We have a 1, 2, 3, right? We have a 1, a 2, and a 3. This is the ICT 3 drives pattern right here. So this is when you see a 3 drives, this is when you don't take this one. This is when you don't trade this one, all right? You see how many candles? 1, 2, 3, 4, 5, 6. 6 candles gets violated by 2 candles with beautiful displacement. All right, so we have a low, high, lower low. This is a mitigation block. Aligns with the CISD right here. And beautifully, look at the bodies. Look at how the bodies just tells you the story. Isn't that beautiful? And this is a breakaway. Why? Because we have the mitigation block just below the fair value gap, right? We have just the fair value gap above the mitigation block, and the mitigation block aligns with these consecutive candles, which is the CISD, which acts just like an order block, but it's a change in the state of delivery because we were in a buy program. You see, every bullish PD array got respected until the button got pressed, which was when the algorithm right here changed its gear from bullish to bearish, from buy program to sell program, just right here. And this is now when price indicates to you that now the bullish PD arrays that work now is acting as resistance, my friend. When we go into a sell model, a sell program, all right? So you can see right here, this is a reclaimed fair value gap or inversion fair value gap, whatever you call it. It just got broken. The high got broken with this candle. You never see the bodies close above the high of this fair value gap. The low of this third candle's low. You never see that until we hit target. So this is the change in the state of delivery. Up, 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 up. This now is a bullish order block. These 3 candles, because the second order block that forms after, or the first order block that is created after the change, the CISD, the change in state of delivery, is now what so I call the order block or propulsion block, whatever you want to call it. And now look at this, a breakaway gap. Why? Because we have a high, low, higher, high, lower, low, right? We have the breaker. You see the breaker that aligns with the inversion fair value gap. This is, guys, this is very beautiful. Using this fair value gap right here as a sell opportunity is very beautiful. You know why? Because this is real support and resistance right here. When a PD array respects and makes price higher highs and higher lows, when that gets violated, you're going to use that to short, my friend, just like here. All right? So that it gets violated, right? Comes back into it. Look at that position with a single tick. I'm gonna zoom that so you can see it. You see? I'm gonna zoom it until you see it. You see how we come back to it? That's crazy, right? So now since we were in a biprogram and we shifted gears from biprogram to subprogram, now every bearish PD array should be respected, or a block respected. These three candles, I mean, I would not use this order block right here, to be honest, because it took a lot of time to close below. Right now, everything is respected right here. Look at this. Everything is respected right here. So I want to really end the video right here. I can talk about this all day, right? Like, I can never stop talking about this topic right here. And if you have any suggestion, oh my God, I'm so bad at English. If you have any ideas, or yeah, you feel, you know what I mean. I'm sorry, English is my third language, so don't blame me for my English and the way of explaining. So if you suggest anything, let me know in the comments. Make sure to join my Telegram, completely free, my Discord, completely free. Follow me on X and leave a subscribe if you find this video helpful and if you learned something new. I really um, enjoy making these types of videos, and I can never stop talking about it because there is so many details, there is so much details, I can never stop. So if you really want me to, if you enjoyed the video, if you want me to continue making these types of videos, I would appreciate your like and subscribes, and until next time, be safe.